All right. So our next speaker is Rick Armacost. He is the a lender relations specialist at SBA, actually the lead lender specialist and the district international trade officer. He's enjoyed building and growing relationships with lending institutions and providing technical assistance and training to borrowers, lenders, and resource partners. Eric brings more than 20 years of banking and financial services experience and expertise to SBA, and calls on the skills he gained at Merrill Lynch, JP Morgan, and the U.S. Navy to provide an outstanding client experience. So Eric is going to talk about or share with us some of the resources that are available through SBA as you start looking at that conversion process to employee ownership. So Rick, the floor is yours.
Oh, good morning, and thanks, Deb. My name is Eric Armacost. As Deb mentioned, I am the lead lender relations specialist for the Indiana District Office of the United States Small Business Administration. It's my pleasure to be here today. So as the lead lender relations specialist, I spend probably about 90% of my time talking with commercial lending officers at different institutions about how to use the SBA's programs to deliver capital where maybe they wouldn't be comfortable doing so without our support. So just in general, you may have heard of the United States Small Business Administration, the SBA, over the course of the last couple of years. Fundamentally, our role is to help small businesses start, grow, expand, and recover. We were established in 1953 as a cabinet level agency of the U.S. federal government. So the reason that I'm talking with you today is because, well, first of all, I was invited by Deb. Thank you very much. But the other important part that I want to discuss is that if you are in the state of Indiana, or frankly, the United States, you are most likely considered a small business. And the reason I have confidence saying that is that at least in the state of Indiana, 99.4% of all businesses are considered small or would qualify for SBA support. You'll note here on the slide that there's a blue hyperlink embedded there. So if you're not from Indiana, for example, you could go and pull the state profile for wherever you happen to be located. And I think what you'll find is that wherever you are in the United States, similar statistics are going to apply, which is the vast majority of businesses in your state are going to be small and qualify for SBA support. The vast majority of employment is going to be with smaller middle-sized businesses, and that the small businesses in your state drive the economy. So we're here to talk with the vast majority of the small businesses in our country. So we talked about start, grow, expand, and recover. As part of that, we also support a network nationwide of counseling agencies that can meet with you and speak with you at no cost to discuss your specific business needs. So the panel that's on here today, supreme experts on co-ops and ESOPs. But you may have questions about your business operations outside of that. And if that's the case, I strongly encourage you to connect with some of the free business counseling that's available through the SBA support. To do that, there's a network of 1,400 partners nationwide. If you know your zip code, you can connect with the resources that are closest to you. As I'm going through the slide, you'll notice there are several places where there are blue hyperlinks. It's also true that if you just kind of hover over the slide, you'll see that there's a hyperlink embedded in this page, for example, that'll take you right to the page. You put in your zip code, and you can connect with the resources that are closest to you. So I'd encourage you to do that if you've got questions outside of the ESOP co-op question. So if you think about the SBA, our role, we used to call it the 3 C's plus disasters, right? So counseling, capital, and contracting. Those are kind of the 3 main support areas that the SBA provides for small businesses across the country. Today, we're really going to be focusing on that capital support or funding options that the SBA supports. So we're going to kind of home in on that. So just to kind of put things in perspective, the Small Business Administration, typically we don't make loans directly. You may have heard about us through the Paycheck Protection Program or the Economic Injury Disaster or EIDL loan program over the past couple of years. That's very atypical. And I'll tell you, up until 2020, we local district office staff interacted very infrequently with our colleagues in our Office of Disaster Assistance to deliver those disaster assistance programs. So we're really going to be focusing in on those core programs because we're trying to pivot more to kind of normal business operations. To deliver those types of loans, the SBA partners with private lending institutions. So that's going to be banks, credit unions, some specialized lenders that only do SBA type lending, and some other kind of mission-focused lenders. The thing I want to kind of stress on this is that for the most part, the SBA does not do direct lending. We partner with these private lending institutions for our programs, and we either provide them with some sort of a loan guarantee, like an insurance product for their loan, or other kind of financial support to help them make loans where they otherwise would not do so or not on very favorable terms. So I want to get that out of the way up front. If you're looking for a loan, I would start by connecting with a private lending institution. If they feel the need to engage SBA for a credit enhancement to get the transaction approved, they'll reach out to us and talk about using the program to deliver that financing for you. So in addition to that, I typically, if I'm talking with a business owner that's talking about doing a large transaction or a startup or something like that, they'll typically ask, well, what kind of grants are available? And generally speaking, the answer is, well, there's not really a specific block grant for business startups or for most, typical business operations. However, if you have an innovative solution to a problem that we're facing, you're going to cure for cancer or something like that, there are some grant funds available for things like that. There's a database at grants.gov. If you think you might qualify for something like that, I encourage you to search that database. So why would a lender seek an SBA enhancement for their credit, and why would a borrower be, what's the benefit to the borrower for doing that? So the big thing is that the SBA's credit enhancements help lenders make loans where they typically would not make them, or if they would make them, it would be on less favorable terms, higher interest rates, more fees, more restrictive covenants, and that sort of thing. So the SBA guarantee typically gives lenders the comfort to make loans with more favorable terms. We also set some absolute price limits so that the interest rate won't be above some certain caps in places. We disallow things like a call feature where they can just demand that you repay your note or refinance it at will. As a former private sector lender, I can tell you I spent all of 2009 doing exactly that, calling loans that we didn't want to have outstanding anymore. It's a bad situation for the borrower and it's a bad situation for the lender. SBA doesn't allow that. If you have an SBA supported loan, you won't find yourself in that position. So as we're talking about SBA's core lending programs, it's really broken down into these three major categories. There's the 504 loan program, the 7A loan program, and the micro loan program. And I recognize these are not very catchy marketing terms, but they're specific citations to the Small Business Act. So 504 is in Section 504 of the Small Business Act, 7A is in the 7A section of the Small Business Act. So, and I mention this because if you're talking with a lender, they may mention some sub-program, and there are several different kinds of sub-programs that roll up to these three major categories. And in fact, we're really going to be just talking about 504 and 7A. The microloan program is capped at $50,000. It's highly improbable that you're going to be supporting the financing for an ESOP or a co-op using a microloan. So it's most likely going to be a 7A or a 504 loan. We're going to start by talking about the 504 loan program. No, I take that back. Forgive me. I put our eligibility slide before the 504 program details. So because the SBA is a government agency and we're administering a government-led loan support program, there are eligibility factors that have to be met. So the S in SBA is small, right? And there are different ways to get to that criteria. Typically, it's not more than $5 million in net income and not more than $15 million in net assets. So if you exceed those thresholds, that's fantastic. You probably don't need SBA support. In fact, there are other ways to qualify using your North American Industrial Classification System code or your NAICS code. So if you're over that threshold of $5 million in net income and $15 million in net assets, and you still think you want SBA support, there may be another way to get there depending on your industry. But generally speaking, if you're above that size threshold, probably you don't need our support, I would guess. The other thing is it has to be a for-profit organization doing business in the United States. And demonstrate the need for the desired credit. So, for example, Bill Gates is the principal of a small business. He probably does not need SBA support to get financing. A couple other things I just want to touch on quickly, in addition to the general eligibility criteria, specific industries. So, by and large, the SBA will support most industry types. I think the one that we're getting a lot of inquiries about now is sort of cannabis-related businesses, and I know that there have been several states that have passed laws that have relaxed the criminality of cannabis-related industries in specific states. However, still illegal federally, and so the SBA cannot support any project that's got anything to do with cannabis. Oddly, we can support hemp. So if there's zero THC in your product and it happens to come from the same plant, the SBA can't support those projects, but that gets a little nitty-gritty. The key thing here to know is basically, if you're in private business for profit, you probably qualify for SBA support unless you're in some kind of a business that's either speculative or has some sort of social restriction on it, or where some people would view the industry type as unfavorable. Typically, we're going to be out on something like that. So now we're down to the 504 project. So 504 is essentially a participation loan, and that's where a private lending institution will identify a project that involves fixed assets. Typically, that's real estate or really big equipment, maybe they like the project, but they don't love it, so they want to share the credit risk with another lender. The SBA has a network of specialized lenders across the country called Certified Development Companies. In the state of Indiana, we have 5. And the private lending institution and the Certified Development Company, or CDC, will partner to provide the financing. And there's more than one way to structure this transaction. Typically, in a 504 project, the borrower will inject 10% in equity for the transaction. The private lending institution will typically do the acquisition financing. So if it's a new building that you're building or an existing building that you're buying and renovating, the bank will do an interim loan to make the purchase or start the construction or complete the construction. Once it's done, the certified development company will come in and refinance up to 40% of the outstanding interim financing with a long-term fixed rate loan. And that puts the private lending institution with a typically 50% first lien mortgage on a commercial real estate or commercial equipment project that makes them feel a lot more comfortable about making the transaction go. I should point out that these are typical, not limited to just this structure. So there are cases where a borrower may have to be required to inject more equity than 10%, or the bank might say, well, we really only want the certified development company to take out 25 or 30% of the project, and we want the other part of it, 65 or 70%. That can also happen. Just this is an example, and it's typical, but it's not the only way that they can be structured. That's 504. It has to involve real estate or other long-term fixed assets. And that brings us to the 7A loan program. So the 7A loan program is the most widely used program. Essentially, if you have a legitimate business expense, you can use the 7A program to execute on it. Again, there are several sub-programs on this. We won't dive into the details on that today. I think the key thing here to know is that the 7A program typically is used for things like change of ownership transactions, particularly if there's not fixed assets involved. You have a highly intellectual property intensive business, or some other business that doesn't have a lot of fixed assets. 7A may be a good fit for you. So I want to give you some specifics on ESOPs. So the ESOPs are a very special type of transaction, and typically the SBA will only support change of ownership transactions where there's a complete change in ownership. So there's no existing owners that are going to stay on board with the business after the transaction. Well, that's not the case for an ESOP. So in this case, there are some special rules that come into play. And to be frank, that the agreements, ESOP or co-op, either way, can be customized for each transaction. So in those cases, the SBA actually has a group of attorneys that operate in our loan guarantee process. They will review the agreement, make sure that it meets all the eligibility criteria, and it's consistent with our underwriting and programmatic requirements. So I think the thing I want to point out on that is that it is a government program. We can definitely help get a transaction done that maybe wasn't going to fly. So if you're talking with the lender and they're having a hard time getting to approval, an SBA enhancement might get you there, but we do slow things down. It's a government program. There's got to be due diligence. We have to kind of balance the dynamic or the criteria of trying to increase access to capital while being good stewards of taxpayer dollars. So there's a co-underwriting that has to happen for change of ownership transactions that involve ESOPs or co-ops. Typically, that adds somewhere between 2 weeks to 4 weeks in the underwriting time frame. To be frank, it's been my experience that if you're doing commercial real estate appraisals or business valuations, those are the things that actually take the longest, more so than the SBA approval part of it. But I want to give you the heads up that, yep, we can slow things down a little bit. So if you're looking for speed, we may not be your first pick, but we may be the best pick given the nature of your transaction. A couple other things I want to point out specifically for ESOPs and co-ops is that in some cases, the personal guarantee of the seller may be required, particularly if they are staying on board, or specifically if they're staying on board with the entity after the transaction is completed. That's also possible. Like for example, in a co-op, at least one person has to provide a full and limited personal guarantee to support the transaction. And again, this, I think, our way of mitigating or ensuring that we're being good stewards of the taxpayer dollars on those. So some of the key things just in SBA lending in general is that and for most businesses, change of ownership transactions and equity injection is going to be required. Although there are some exceptions to that, if it's between existing partners and there's sufficient equity on the books, that can be waived. If there's, determined that by underwriting analysis that there's a equity shortfall, there may be some additional cash that has to be injected in those types of transactions as well. But there is the possibility of moving forward without that. And ESOP, co-op, or neither of those, typically a personal guarantee is going to be required if you're getting an SBA supported financing package put in place. It's also the case that if your lender does an analysis and determines that the size of your loan exceeds the value of the collateral that's available to support the loan, that they are required to seek additional assets from the personal balance sheet of the principals of the buying entity. So if I've got $1 million house with no first mortgage and I'm trying to borrow $1 million on a business that has no tangible value, let's say it's all intellectual property, the lender is going to be required to place a lien in place on my home to further secure the loan. The other part is that the loan, if it's an SBA supported loan and it's not a disaster assistance loan, that is with a private lender, right? So it's not with the SBA. And that's the case unless and until the loan defaults and the SBA steps in to purchase the outstanding balance from the private sector lender. So up until the place where the loan's been fully defaulted and the lender has written it off, the lender is the servicing location for the loan. The guarantee is for the lender to help the lender make the loan possible versus for the borrower. I addressed this specifically because early on in my SBA career, I had a call from a business owner that said, well, if I've got an SBA guarantee and the business doesn't go well, I can just walk away, right? No. So in fact, the SBA is going to look for repayment, typically or hopefully just through normal payments back to your private sector lender. But if the loan defaults, we're going to still look for satisfaction, and we will ultimately charge off a loan too. But it's not good for your credit, and it's not good for your access to federal benefits to default on an SBA guaranteed loan. So you're still 100% liable for the loan, even though there's an SBA guarantee in place. So you might be asking yourself, well, that's all great. How do I connect with the lender? Well, I would say if you have an existing relationship with a lending institution, to start there, right? So business lending is like a lot of lending. It's relationship driven. So if you have a good relationship with a financial institution, I would start there. But it's also true that credit is a product. It's a product like any other product. And I typically, if I'm like shopping for a car, I don't walk into the first car lot I see and buy the first car I see, right? I shop. And I would encourage you to shop as well. Start with your existing relationships, but I would encourage you to consider using the Lender Match system. Lender Match is a free to use system hosted by the Small Business Administration. There's a hyperlink there on this page, as you can see. And this works sort of like one of those online dating things, at least my kids describe it anyway. So basically, if you go out and create a profile and they'll say, oh, my name is Eric Armacost, I'm in Central Indiana, and I need $250,000 for a startup restaurant. Well, that request will then get emailed out to the thousands of lenders we have participating in this system, and the lenders that are interested in supporting that type of transaction will reach out to you directly to say, hey, we're interested in talking with you more about this transaction. So it's not a credit application, it's not an approval. The SBA underwriting process doesn't start until the SBA, or correction, until your private sector lender takes an application from you. But it is a way to quickly connect with all the lenders that we have that participate in the SBA lending program. So if you're looking for other alternatives, or an alternative to look for other lenders, my opinion is that this is the fastest way to connect potential borrowers or business owners with credit. So this slide deck is going to be emailed out to you by the conveners of this meeting today. The contact information for the SBA Indiana District office is here. Going back to the local assistance page earlier on in the slide deck, if you're not in Indiana, no worries. If you go to that local assistance, your closest district office will be directed to you or you'll be directed to you the contact information for your local district office by using that Find Local Assistance tool. And then that's my contact information directly. Feel free to give me a call or an email if you've got a question about your specific transaction. And at this point, I would just open it up for questions.
So thank you, Eric. If anyone has a question about any of the SBA resources, whether it's through lending or through their technical assistance, please put it in the chat. And Eric would be more than happy to respond to your questions.
All right. Well, thank you very much.
Hold on, Eric. We've got a question here. If a business owner already has a bank, will that bank likely already participate in SBA programs?
So most lending institutions have the ability to participate in SBA lending. Now, I have to be honest, there are some smaller particularly credit unions and other fintech type companies that are not participating at SBA lenders at this point. But I would still start there and see what they offer. And if you don't like the terms, again, it's a product like any other product. If you don't like the terms that you're hearing there, by all means, comparison shop that. And Lender Match is a great way to connect with those other lenders.
Other questions? So here's another question, Eric. For an ESOP or cooperative conversion, is a loan guarantee required?
Absolutely not. So in fact, I would say that your conversation is going to start with that private sector lender. If they examine your transaction and say, yep, we can get this approved, fantastic. However, it's not uncommon, particularly in businesses that do not have a lot of tangible assets, for a lender to say, we like this transaction, we like you, but there's not a lot of meat on the bone here. If this loan goes south, for us to recover our funds that we've dispersed to you for this change of ownership transaction. So they'll turn to the SBA for a guarantee, which is a credit enhancement. It's essentially like an insurance product for them, to help them get over their credit approval hump and get the loan approved. So you'd start that conversation with that private sector lender. If they can approve you under their conventional underwriting criteria, great, fantastic. And if they can't, they typically will reach out to me and say, well, we're looking at this, doing this transaction. How do we go about doing that? And then I'll walk them through that.
Okay, and another question. Are there other state or federal programs that help mitigate that personal guarantee?
So this is a common question. Every state has their own capital access program. So in the state of Indiana, they call it the Capital Access Program, the CAP program. So the Indiana Economic Development Corporation has a program that uses state funds, cash secure some loans in certain cases. Although I think the last time I looked at their underwriting criteria, they often, not always, but often also required a personal guarantee. At the end of the day, and this is more not from the SBA, but just as a former lender, it's really tough for a business purchaser to sell a lender on the idea of lending them money to purchase a business if they don't believe enough in it to personally secure it themselves. So that's sort of not a red flag, but it's a yellow flag if you're a loan officer and you're talking to somebody that wants to do a transaction and the first thing they say is, well, I don't want to personally guarantee the loan. You kind of go, so you don't really believe in it. And that's typically why we will require that personal guarantee, is to ensure that you're as all in as we're going to be.
Eric, could you talk just a minute or so about what is it? I mean, SBA and their partner lenders, what are they looking for? What are they used to talk about the 5 C's of credit. Can you just really quickly kind of run through for those who maybe aren't as familiar or haven't accessed banks for loans for their business? I'm not sure who that would be, but just kind of go over that just a bit so people have a sense of what these bankers are going to be looking for, whether it's through SBA or they're doing it independent of the loan enhancement product.
Sure. So Deb mentioned the 5 C's of credit, and this goes well beyond the SBA. This sort of basic lending 101. So the 5 C's are credit, character, capacity, capital, collateral, and conditions. So that's sort of anybody that's lent money knows well. They will be exposed to those 5 C's. So I won't break down each one of the 5, but essentially it comes down to your past payment history. And so I'll just kind of sum this up. If you are seeking credit and you're in prison for bank fraud, it's going to be tough to get a loan, right? So if you got a personal credit score of something south of 600, it's going to be tough to get a loan. Not impossible, tough, and you're probably not going to get the best pricing. I think we all know that. It's just kind of tougher to kind of find yourself in that position. And believe me, I've had challenges in my own life. So I know that there are things that can happen that can damage your credit score, right? So it's not a value judgment. It's just simply, if you're asking me the things that a lender's going to look at, those are the first things, right? So what's your personal credit? What's your payment history? Okay, if there's an issue there, what mitigates that? And if it's a situation where, well, I've got tremendous cash flow, maybe I had some medical bills that I got behind on, and now I'm catching those all back up. I'm back to full health, and I'm back to cranking. But I had some challenges recently. That looks different than, well, I've borrowed money 10 times and I've never paid anybody back. Well, that's a kind of challenge to overcome. That can be overcome, but typically that's going to come from really strong collateral, maybe a co-signer or guarantor, something like that, to help get over the hump. But typically, those the 5 C's are what every lending officer is going to look at, and that's true whether it's commercial or personal. Does that answer the question? I feel like I
Yes.
rambled.
Yes, thank you. That was perfect. So we've got about 2 minutes. Any final question for Eric? Okay. Well, thank you, Eric, very much for, whoops, one more. Let's see if we can get this in here. Given federal stimulus and programs right now with USDA, RD, and others, are there any particular programs exploring how to better stack, blend, braid, or dovetail efforts, support projects and money? I'm asking, let's see. Grant funding can be risky, while right now there is stimulus and support funds for things like community co-op corps, maybe for fabric mapping and broadband push and infrastructure for alternative energy transitions, etc., is partly what I'm increasingly becoming aware of is an opportunity and a need. I don't know if
I think I understand the question. The question is how do I get my head around all the stuff that's available? How do I get my hands on as much money as I can get my hands on without having to repay it? How do I do that? Well, there's not a short or simple answer to that. It does take some research. There are some grant funds available, as I mentioned, at grants.gov. I encourage you to search that database. It's also the case there are several state and local incentives that are available through facade programs or matching fund grants and that sort of thing. Do I know all this? Nope. The standard operating procedure that governs the 7A program is 500 pages. I do good to have a good understanding of that. So I don't have a grasp on everybody else's programs. I do know that there are a number of them out there, particularly for broadband or for innovative tech or for biofarm. The places that I can direct you to that might be able to help you with that would be the small business development centers in your local area. So here in Indiana, the Indiana Small Business Development Center, there are several offices across the state. Using that local assistance button will put you in touch with those small business development center counselors. I would encourage you to have that conversation. Here again in the state of Indiana, the Indiana Economic Development Corporation hosts a number of incentives and financial programs to support specific types of business. I would encourage you to make a connection with them and see if any of their programs fit with you. But in terms of a clearinghouse where, sort of a step 1, do this, step 2, do this, and here's everything you can get to by clicking a button. Nope, not that I'm aware of.
Okay. Thank you, Eric. That was a big question. So thank you again for sharing with us all the resources that are available through SBA, both on the lending side and the technical assistance side. So I am going to